Hello and welcome. First and foremost, on behalf of all of us at ChessAg, Full Harvest Partners, and Menard Capital, we hope this finds each of you healthy and safe during this unprecedented time. Please allow me to introduce you to our guest and my friend for this short and hopefully both informative and inspiring video, Shonda Warner. Allow me to provide some historical context. Shonda has spent over 30 years managing financial assets. Some highlights include her having been a managing partner for a London-based asset manager, a partner and co-managing director of a US-based fund-to-fund, an executive director at Bear Stearns, setting up their European equities prop trading desk, executive director at Goldman Sachs, as a member of their London equity derivative and prop trading desks, and several years in Tokyo, running Goldman's prop warrant trading business. Perhaps it was her start at Cargill in Kansas City and Minneapolis, where she traded grains and financial instrument arbitrage, coupled with her being born and raised on a farm in Nebraska. With such a distinguished career, one thing remained her true north: the keen understanding of agriculture and its undeniable relevance to humankind. It was with this continued passion that prompted Shonda to establish the only women-run agricultural investment company, which is 100% owned by her, who just farms, but also has the acumen, the judgment, the track record, and the experience to manage the assets invested into agriculture that she's tending. So with that, allow me to introduce my dear friend, Shonda Warner.
Thanks so much, Rachel. Gosh, glowing introduction. Maybe we should just stop right there. But thank you and greetings to each of you from our farm here in Oregon. My name is Shonda Warner, and I'm the founder and CIO of ChessAg, an asset management company focused on agricultural investment opportunities. In lieu of welcoming you to our offices, we welcome you to our farms here in Oregon. I'm sorry it's raining, or we might even be outside.
Perfect. Well, the purpose of this short few-minute video is to provide a brief masterclass from Shonda on agriculture and the tools many you will find to be very helpful when meeting with institutions, private clients, investors, trying to understand what trustees are looking to know. And so the question is, where are we in the context of history? What will we be headed into? When we'll be going back to work? What are the short and long-term implications of this new normal we're battling? So as you prepare for those investment committee meetings, we thought Shonda could provide some tools to inspire, inform, and ignite important discussions around your portfolio construction, asset allocation, and the perspective from her seat.
Perfect. Thanks, Rachel. So everybody, let's get right to the point. Food is one of the necessities for life, and it's on everyone's mind right now. It has not been readily available, as we have all learned all of a sudden in the grocery stores. Food supply chains aren't working normally. We believe that there's a tremendous investment opportunity over the next year or two. Agricultural investing has always been a special niche in diversified portfolios. It solves three distinct functions in a portfolio. First, it's an alpha generator. It's also a liability hedge and an inflation recession hedge. Well, that's the third thing. It's an inflation and recession hedge. It's a liability hedge and it's an inflation recession hedge. And in this context, when investigating our investment process, you'll find that we examine and incorporate both the micro and the macro global economic trends. And notably, as the middle class globally recovers and consciously continues its demand for higher quality food, now it's even more worried about its health than ever, we have identified a clear demand that can be fulfilled.
Shonda, in that context, I thought we could conduct a short Q&A with regard to questions investors have been asking and your insight on those. Does that sound good?
Absolutely, shoot.
Awesome. So if we want to invest in ag, what am I actually investing in? What does ChessAg put into your portfolio?
So ag investing is multifaceted, and I think everybody's doing all pieces of this. It used to be just farmland, but now there's agricultural private equity. You could have a CTA and do commodities trading, or there's even ag tech venture startups. We tend to focus mostly on farmland investing and operating, as well as the next chain up of private equity, whether it be logistics or processing or a seed business, something like that, that's directly related to what we're doing. It's those 2 points that form the basis of everything else and what we think of as the agricultural and food sort of risk pyramid in a way. And we knit these assets together within these 2 themes to form a portfolio working on using diversity to create risk mitigation across crops, geographies, timings, and cash flow.
Perfect. So what are the benefits of investing in ag?
So steady long-term capital appreciation is one of them, along with equal and at the same time, sort of a current coupon type of cash flow from your farming activities. Preservation of capital. It's a very safe, it's very, very diversified. It's a fantastic inflation hedge. It's highly uncorrelated with other assets, even REITs, and it's an infrastructure investments. And other sort of classic investments that people look at when they think of real assets. So just for a real asset bucket, it's actually very uncorrelated towards all the other real assets in that bucket.
I've read so many articles lately about this being a tipping point, kind of an ideal inflection point to be investing in ag more than ever. Could you expand on that?
Since about 2012 or 13, farming, agriculture in the United States has had a really, really tough 6 years. We had a weather event that rallied prices. We came down from that weather event. We have beautiful global crops yields after that globally. We have very high stock numbers. It's been super tough. And then we had the trade war with China, and that sort of was something that might go away on even longer. And that sort of began to end in January, so to speak. And then all of a sudden, boom, we have a pandemic. So we've had 6 years of a difficult time. I sort of feel sad saying this, but the pandemic comes along when many farmers are like down to the nibs of their cushions. And so I think that more than ever that there'll be some incredibly tremendous opportunities from this. And maybe oddly, there's even a way to invest that will provide returns to our clients and also help farmers stay in business at the same time. It's really so important to our food chain and our food supply to do things a different way and to concentrate on keeping farmers farming. So perhaps there's some win-wins that we can construct in there.
Well, that lends the question then, what is going on with the supply chain, or how does this affect investing in ag?
So I'm sure you've read that many parts of the supply chain are kind of breaking down. I think that the bottom line is that we have too many industries that have consolidated too far, and we have just-in-time inventory systems, and so anything that punctures that a little bit sort of breaks it down. And in a way, it's a double-edged sword for investing in ag. On one hand, it will likely result in some really good buying opportunities that we were speaking of, whether it be farmland or private equity opportunities for patient investors. But it does, in the very short term, increase operational risk to farmers or to small private companies that aren't nimble or knowledgeable enough to adapt.
What should one think about when selecting an investment manager in ag? Maybe what is unique about Chess Ag? What do you see that others may not? What do you know others can't see? You have a unique vantage point. Maybe you could expand on that.
Sure. So the biggest requirement in picking an investment manager is finding a partner whose judgment and opinions and values you trust and respect.
Yes, absolutely.
I think, yeah, huge. In addition to experience managing financial assets, I think you need to make sure that your manager, in this case, really understands farming, not just the farming industry, that they know how to farm. If the CIO hasn't ever kind of run a farm and doesn't know how to operate equipment or prune a bush, et cetera, you're opening yourself to a lot more risks than you should, basically, in all aspects of your investment process, whether it's a diversified portfolio or figuring out the right time to farm or figuring out what the real operational risks are. And so you need to remember that a single significant portion of your value of your investment is going to come from perhaps the operation of the farm or the operation of the next level kind of small private equity business, whether it's you or a tenant farming it, it's really important to understand it.
It makes sense. Well, I mean, you're certainly unique in that way. I'm pretty sure I can't even think in my 26 years of anybody who's been able to be a CIO in the industry who knows how to drive a tractor, much less someone who's spent decades in the capital markets and can do both simultaneously and well. So, thinking about that, I've been speaking with a lot of institutions, family offices, investors, and the question really is context, sizing, and fit, which is really understanding how does an investment in ag compare to the risk profile of other investments, equities, bonds, or anything else? How would one think to size it? We now know that this is the ideal time, and you've built a powerful argument for that. When looking at its use in the context of a diversified portfolio, walk us through how we should think about that in sizing.
Well, okay, so the sizing is twofold. But first of all, the really important thing to say, and I think that one of the most positive arguments about ag in general is it is really, really not diversified. It's undiversified. And so it's super uncorrelated to the asset classes that investors, whether they be institution or high net worth, family offices, et cetera, invest in. The classic two numbers that demonstrate this most is that it has about a 40% positive correlation with inflation and a 40% negative correlation with bonds, right? And I guess that maybe that's not a huge surprise, right? Excuse me. But I think that the thing that is surprising is that if you look back over the last, take your pick, 20, 30, 50 years of history, you'll find that its returns compare favorably with the S&P, and it has about half the volatility. Its returns are higher than bonds with the same volatility. And given that it's diversified with those other factors, it's a very, I think, good investment for a portfolio.
So would you break down the returns you expect from ag? What should an investor expect in, say, 5 years out or 10 years out?
Okay, the first thing to remember is that ag investing, not the private equity piece, but the farmland piece, which is the bulk of what we do, it has two components to it. It has a cash component and it has a capital appreciation component. And so it really depends on what type of agriculture we're talking about or farmland that we're talking about. But row crops, generally speaking, you might expect an 8 or 9% return, with about half of that return coming from capital appreciation and half coming from your current coupon. Then if you go on, I sort of think of that as the bottom of the risk pyramid again, row crop. It's boring, dull, there it goes, but there every day. If you go on up that pyramid, you come to sort of producing permanent crops, an apple farm that's 8 or 9 years old, et cetera, an orange grove. And when you get to that kind of sort of permanent crop that's mature, you might see more like 8 or 9 or 10% annualized yield. But interestingly enough, if you strip out the urban proximity to cities of certain farms, permanent cropland actually appreciates slower than row crop land, and it only has about a 3% expected capital appreciation. That's if we look over the last 50 years. And then if you go on up that pyramid a little bit more, you look at perhaps investing in a development. Maybe we're going to develop hazelnuts or we're going to develop blueberries. And if that's the case, you're going to spend a few years with no cash flow. But over the lifetime of the investment, you probably might expect between a 10 and 15% coupon from that investment based on the capital that you put in. And so, that might be more like a 14, 15, 16% overall return when we look at that. So the private equity investments, they're not the sexy ag tech kind, really, right? They are more sort of, I would say, private equity that's associated more directly with farming. That could be food processing, it could be logistics, we could buy a cover crop seed business. sort of more basic, and those you might expect a 14, 15, 16% kind of return from. I don't think you're going to hit, these kind of crazy startup things.
Right, right. Is it beneficial to use leverage in ag? I mean, how much and what does Chess Ag do?
So we like leverage. There's nothing wrong with a little leverage at certain times with certain investments, but we're really careful of it. We've been investing for over 30 years now, and seeing leverage take a lot of people down. So we have one big rule: we never go over 50%. It's our view that some managers rely too much on leverage and not enough on sort of buying the right properties and running their farms well. If you take on too much leverage, all of a sudden, in some ways, you've gotten rid of one of the basic tenets for investing in ag, uncorrelated, sort of preserving capital type of investment. I think that you should really talk to, how do I want to say it? If you're interviewing an investment manager, you should really sort of grill them on their use of leverage. I think if there's one area in our industry that scares me, it is this. I think that there are some ag managers out there that are over-levered, and maybe their investors don't really realize it. We'll see. On average, we probably shoot for 20 to 30% leverage. And sometimes we don't lever at all. In our second fund, no leverage whatsoever. We were a little negative after this weather event in 2012. So
one of the topics that a lot of investors have been talking about in the last few years has been ESG, environmental, social, and governance, and how important that is. What I've always been inspired with you in all the years I've known you is the understanding that you can be altruistic and capitalistic simultaneously.
yes.
You can be a fiduciary for assets and managing assets, and yet you understand the double or triple bottom line, which is to give back and to be of service and to show that you can actually run both beautifully. Very few have been able to do that well. In all the years I've known you, I know you to be that person. So what are those kind of environmental and social benefits in your investment approach, and how have you so beautifully managed both sides of the trade?
So basically, investments in ag, in my opinion, I mean, we're like in the dirt every day. So it's really where the rubber meets the road, right, for environmental and social impact. Environmentally, there's a huge range in how a farm operates and how it impacts the environment. For us, soil regeneration, being kind to the soil, putting back as much or more than you take out, treating it gently, and water usage are at the very top of our lists. Intelligent use of chemicals, following the instructions, intelligent use of fuel, right? Very, very important.
Right.
Recycling is huge as well. It used to be that it was easier to do. I just found out today that I sent 10,000 pots, empty pots from planting a hazelnut orchard back to the recycler. And I was called by my folks saying, they don't take these anymore. That was this afternoon. So we're trying to find somebody who can recycle our pots for us. But all of those things knit together, and it's very, very, very important. So that if you build, especially if you build the soil's value and you intelligently conserve water, to me, it makes farmland equal to gold. It makes it better than gold. Gold just sits there and makes you comfortable. This you can eat from for years. That's so sexy, right? Anyway, so there's that. There's that, all that sort of side of it. Then there's another side of it. And I think Hillbilly Elegy or The Flyover Country or all of those books lately have shown a light on the urban-rural divide. And in many ways, our heart is equally there. We think that our job is, because we've had all this experience all over the world, our job is to be a bridge. And first of all, so we worry about our staff. We want to kind of attract the right people, and that's very interesting to have sort of Wall Street standards in terms of hard work and excellence, and very, very rural communities that you're looking for staff in, woo. But one of the things that we've done is where probably an average salary in a place like Oregon might be $14 an hour or Mississippi 11, for farm workers, we pay 18. So we really emphasize that people are well paid, and because they're well paid, we have expectations of them, and we really try and build bridges first with our staff and then the rest of the community, right, to sort of think about things maybe in a slightly different way. It's super expensive to run a farm. If anybody realized, if we sat down with people, they'd just be like, ah. And so for us to put a $20,000 order for caustic soda in with our local hardware store is a really big deal. Nobody bothers to do it. And if they're equal in price to someone else and they'll do you a deal, it's so meaningful. So we try and do as much of that kind of business as we possibly can, support our local communities. While we do it because it's the right thing, right, for these communities, we think it also pays a lot of benefits in the long run. We find better tenants, we have a community network, and most importantly, it helps us with sourcing deals in the future because we really know what's going on.
Right, makes perfect sense.
Yeah.
So when you think about, your background in capital markets, being a farmer, being an ESG pioneer, a food provider, clearly for so many, and establishing and building the local community, being a steward for your own and your family's and others' capital for institutions and private investors, it's clear that you can't do this from an armchair in Midtown Manhattan. This is something that requires a command and understanding of the earth and the space and the area you're in. And that's a profound shift in the way I think a lot of people understand ag, that to have the benefit of knowing capital markets, but also understanding the power and impact of the community and its impact takes ESG to a different level. It creates a dimension to it that's missing. And so I think in many ways you're setting a floor, a new paradigm, a new benchmark for the way that hopefully investors will start recognizing and understanding when thinking about ag. So share a little bit more about that, and because I know that in this masterclass, it's really getting a finger on the pulse of what matters most in your mind that you can share with the investor. Maybe you could share a little bit more on that.
Okay, I just want to back up and say, all of the things I think I just talked about aren't in the UNPRI. So I did not say we are UNPRI signatories. We check boxes, but we think it's about so much more than checking boxes. Anyway, so thank you. And I'm blushing, and you're so kind. But anyway, yeah, there is so much to do. And by conducting these master classes around ag, we hope that we can inspire and inform and maybe demystify both ag and ESG itself. ESG is a whole interesting kettle of fish. It's a very, very, in a way, it's a very, very simple story. It's a chance to invest in revenue generating unlevered, non-correlated investments that are utterly essential to our daily lives that basically feed the earth. I mean, if we can do that, we're checking an investment box, we're making money for people, we're preserving their capital, and we're doing something kind for Mother Earth. Like, wow, that's what I'm going to do the rest of my days.
Right. I mean, yeah, it's clear there's never been a more important time and valuable time in our history than investing in our own food source. Right.
Yes, it's undeniable. It's amazing. We need to feed ourselves. Hopefully we can feed others. Agriculture is one of our greatest resources in this country. If you look at all the countries in the world and who can actually grow significant amount of food, there's not that many. Many have inhospitable environments for growing plants, basically. So I think that we're very, very well positioned to capture opportunities in this space. And I know our time's running out, Rachel. So
no worries.
So
absolutely.
Much.
It's a total pleasure.
I say goodbye to everybody, and we wish you all the best. Thank you so very, very much for listening, and hopefully we'll bring you a few more sessions.
Exactly. Thank you all so much for your time. Thank you again, Shonda. Fantastic.
Great. Until we meet again, take care.
See you soon. Okay. Bye-bye.